We're seeing a little bit of risk-off unfolding today. Is that curious to you, given that we did get a deal between U.S. and the EU?
Look, I think there is a lot of positive momentum that we've seen, certainly since April to now. I think market is taking all of these developments, negotiations with the U.S. Also, the deal in Japan last week has been very positive. Over the weekend, we had the EU and U.S. deal, which is positive. And then obviously we have the dialogue between U.S. and China, which, as I think expectations are that they will kind of extend the grace period to another 90 days. So all of these are positive developments. But I think what the market is trying to do now is assess and look into the details of each of those deals. I think the momentum has been there, and we've seen a reaction of the market on that. But again, looking at the detailed understanding, what are the consequences, the implications on each of those markets. And as we've heard from EU, again, it's not the ideal situation, but it's certainly better than it was in April than the first set of tariffs were announced.
I'm sure the market will be looking as to how sturdy this détente will continue between U.S. and China. What in particular are you going to be looking out for today?
Yeah, I think it's fair to say that U.S. and China has reached some level of transactional stabilization. I think there's a desire from both companies to continue discussion. And I think it's fair to say that I think U.S. is still aiming to de-risk, or strategically, I would say, de-risk from China, but not decouple. And I think this is key when it comes to that bilateral relationship. I would say if you had to look at all the key partners and the deals that we achieved, those in Japan, EU, I think China stands to be a little bit more complex. I think there's different levels in which China is trying, or U.S. is trying to achieve a deal with China. Obviously, we have fentanyl tariffs, we have sectorial tariffs. And then we also have that dispute around cheap exports and certainly the rare earth, which has been kind of the key holding pattern for China in these negotiations.
You bring up rare earths, and that is a key material ingredient in the development of AI. And just at the weekend, we got the AI policies being laid out by Premier Li Qiang. Was there anything in there that stood out to you? Because just a couple days prior to that, we heard from President Trump and his AI vision. As far as China is concerned, it's more open source, and they also want to do this together with the global South. They want to do it internationally. What stood out for you?
I think it's important that when we had the DeepSeek moment, and the innovation in China certainly has led to an excitement around the China ability to lead as well in this technological advancement. When it comes to open source models, I think the challenge is obviously the level of trust with other countries, other companies away from China could offload the data and train the models. Again, the back end still sits in China, and ultimately development to other partners is still development around data security and trust. When it comes to the DeepSeek, obviously a large development of that, I think it's very exciting for China onshore. I think it's largely a China onshore story for now. It has scope to improve productivity, and we certainly have seen already the benefits of this technological advancement in some of the online platforms. The earnings revisions in that space certainly has materialized, I guess, on that positive benefit that they've had. And I think longer term, it has scope to improve places like healthcare, even industrials. And I think it's a longer term story of the overall productivity and efficiency that China could achieve.
Now, based on what we have just discussed here, we're looking at some of the policy coming through from trade as well as AI. How does this influence your investment decisions? What are you looking at?
I think we'll ultimately still stay razor focused on sectors or parts of the market in China that are supported by policy. We've seen, again, a desire for policymakers to redirect this economy away from manufacturing and investment into a lot more domestic consumption. And I think sectors that are benefiting from that, I think we're looking at those very closely. And this technological leadership, and it's not just the AI story, but the broader ramifications of the AI. And at the moment, as I said, the first stage of it, we've seen the online platform benefiting purely by improving the customer experience on purchases, which again has led to that earnings recovery. I think the longer term story is still valid, that those are going to be key beneficiaries longer down the line. When you look at the broader market, and we've heard in the opening remarks, the deflation is still present in China, and that's going to keep the broader earnings recovery subdued. So again, we need to stay focused on sectors and specific companies. It's not kind of beta markets rally type at the moment.